Feeling a bit lost when you look at your Wealthsimple account? You see numbers, charts, and maybe some green or red, but do you truly understand what it all means for your financial journey? Are those returns good? Are they bad? How do you even know if you're on track to hit your goals? It's a common feeling, and frankly, it's a valid one. Wealthsimple has made investing incredibly accessible, and that's a fantastic thing. But with accessibility comes the need for understanding. You've taken the smart step to invest, and now it's time to take the equally smart step of truly comprehending how that investment is performing. We're not just talking about the superficial daily fluctuations, we're diving deep into how to track your Wealthsimple returns in a meaningful way, how to interpret those numbers, and how to use that information to make smarter financial decisions. Think of it this way, you wouldn't drive a car without knowing how to read the speedometer or the fuel gauge, right? Your Wealthsimple portfolio is your financial vehicle, and understanding its performance is your dashboard. Without it, you're driving blind, hoping for the best. And hoping for the best isn't a strategy that builds long-term wealth. Today, we're going to demystify your Wealthsimple returns. We'll cover everything from the basic definitions to advanced tracking techniques, all designed to empower you to take control of your financial future. This isn't just about checking a number, it's about understanding your progress, identifying areas for improvement, and ultimately, building the confidence to stay the course. So, let's start with the absolute basics. What is a return? In simple terms, it's the gain or loss on an investment over a specified period. If you invested $100 and it grew to $110, your return is $10, or 10%. Sounds simple enough, but Wealthsimple presents a few different types of returns, and understanding the nuances is crucial. First, you'll often see your total return. This is the overall gain or loss on your entire investment from the moment you started. It's the big picture number, telling you how much your money has grown, or shrunk, since inception. It's a great high-level indicator, but it doesn't tell the whole story, especially if you've been adding money regularly or have a long investment horizon. Then there's your time-weighted return. This one is a bit more technical but incredibly important for comparing your portfolio's performance against benchmarks or other investments. The time-weighted return removes the impact of cash flows, your deposits and withdrawals, making it a pure measure of the investment manager's, or your own, performance. It's like saying, if I had just put my money in and left it there, how much would it have grown? This is the preferred method for professional money managers to measure their success because it isolates the investment decisions from the client's funding decisions. You might also see your money-weighted return. This return takes into account the size and timing of your cash flows. If you made a large deposit right before a market surge, your money-weighted return would likely be higher than your time-weighted return. Conversely, if you made a large deposit right before a dip, your money-weighted return might be lower. This metric is useful for understanding the actual growth of your personal invested capital, considering all your contributions and withdrawals. It reflects your personal experience of the investment. And of course, there's the annualized return. This is a way of expressing a return over a period longer or shorter than a year as if it occurred over a year. For example, if you had a 5% return over 6 months, your annualized return would be roughly 10%. This allows for easier comparison of investments with different time frames. Now, where do you find all these glorious numbers in your Wealthsimple account? Let's walk through it. Log into your Wealthsimple account, and typically, on your main dashboard, you'll see a summary of your portfolio's performance. This often includes your total return in dollars and percentage. To get a more detailed breakdown, you'll want to navigate to the specific account you're interested in, whether it's your TFSA, RRSP, or non-registered account. Within that account, you'll usually find a Performance or Returns tab. This is where the magic happens. On the Performance page, Wealthsimple usually provides charts that visualize your returns over different periods: daily, weekly, monthly, quarterly, year-to-date, 1 year, 3-year, 5-year, and all-time. This visual representation is incredibly helpful for quickly grasping trends and identifying periods of growth or decline. Don't just look at the line, pay attention to the scale of the y-axis and the time frame. A small dip on a 5-year chart might look dramatic on a 1-month chart, and perspective is key. Below the charts, you'll often find a table or summary detailing the different types of returns we just discussed: your total return, time-weighted return, and sometimes your money-weighted return for various periods. This is where you can see the precise percentages and dollar amounts. Now, here's where it gets interesting. How do you interpret these numbers? Let's say your total return is positive, but your time-weighted return for the last year is negative. What does that tell you? It might suggest that while your overall investment is still up, the recent market conditions or your investment strategy hasn't performed as well in the short term. Or perhaps you added a significant amount of money when the market was lower, which boosted your total return. Conversely, if your time-weighted return is strong but your total return is lower, it could mean you started with a smaller initial investment and haven't added much, or perhaps you withdrew funds. Another crucial aspect of tracking your returns is comparing them. What are you comparing them against? First, compare them against your own financial goals. Are you on track to meet your retirement savings target? Is your emergency fund growing as expected? This is the most important comparison because your investments are a tool to achieve your specific objectives. Second, compare your returns against a relevant benchmark. For a diversified portfolio like those offered by Wealthsimple, a good benchmark might be a broad market index, such as the S&P 500 for U.S. equities, the TSX Composite Index for Canadian equities, or a global equity index. Wealthsimple often shows your portfolio's performance relative to a specific benchmark directly in the app, which is incredibly helpful. If your portfolio is consistently underperforming its benchmark over the long term, it might be worth reevaluating your risk tolerance or even considering adjusting your portfolio allocation. However, short-term underperformance is normal, don't panic. The key is to look at long-term trends. Third, compare your returns against inflation. This is a silent killer of wealth. If your investments are growing at 3% but inflation is 4%, you're actually losing purchasing power. Your goal should always be to achieve returns that outpace inflation over the long run. With that said, thanks for watching, and until next time.